And Steve, editor-in-chief of Forbes Media, I want to talk about this tax cut deal. I know it's not the flat tax that you so desperately wanted, but do you like what you're seeing coming down the pike?
It's going to do more good than harm, which was not
That's a rather tepid endorsement,
no, it
Forbes.
isn't. A couple of months ago, they were going to do more harm than good. But they fixed some of the tax brackets, especially on the Senate side. They are clearing up what on the pass-through, so you really are going to get a lower tax thing, no matter what your income on that. That's a good thing. And if they follow through on the tax brackets, the Senate tax brackets, even though they had 7 instead of 4 in the House, their brackets were better in the sense that you had lower rates on higher levels of income. Okay. So that's stimulative. They had forgotten for a while that the real key thing for taxes, Stuart, is the rate you pay on your next dollar of income.
That's true.
The Senate did a better job. If they keep those kind of rates in there, those kind of brackets, we're going to do okay.
Now, what about the growth next year? If we get this plan in place, do we get 4% growth next year?
We get close to it, because this year we got 3/4 of 3% growth just by deregulation, just by not hammering the economy, just leaving the thing alone. It started to prosper, started to blossom. And so next year, when you have these lower rates coming in, and what they should say, what the Republicans should say, instead of saying this is the most historic tax act, blah, 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 say this is a down payment on more tax cuts to come. If we retain Congress, we're going to do more in 2019. Give something out there. Get people anticipating even more to come.
Now, let's communicate it, too. Hold on, Steve. I want to talk more about big technology stocks, actually, because this new tax plan includes... It's kind of a repatriation tax. It's about a 10% tax at a very low level of taxation, really forcing big companies to bring the money back from overseas and bring it back to America. Joining us now, John Layfield, CEO of the Layfield Report. John, I think that particular provision of the tax plan, bring that money back from overseas, will be of great help to the big tech stocks in particular. Am I on the right track?
I think you're spot on. It's going to be a huge help to the tech stocks. And what they've done, I think, is one of the best things they've done in this tax package is they've actually put a tax on this, so you're going to pay it anyway. So now there's actually a disincentive to keep it overseas, which is what you want. I don't think you're going to see a lot of extra CapEx spending, because the Morgan Stanley Plan Index had the highest CapEx spending since 2007 this year. You already have low interest rates. But what you're going to see is these tech companies are going to become much better companies. Look at Apple, for example. $252 billion of their $270 billion is overseas. They have $100 billion in debt because they've been borrowing money, because it's cheaper to borrow money at AAA-rated bonds with 3% interest than it is to repatriate at 35% interest. You're going to see these balance sheets become much better, and you're going to see these great global companies grow their companies in the United States, which is very important.
When we opened up the market this morning, John, the Dow was up about 80 points. We were well on the way to 25,000. Okay, we paired that gain. We're now up only, what, 14 points. That's it. But the question is, to you, John, are we going to see 25,000 on the Dow in the very near future? It's like before Christmas. What do you say? John.
I think it'd be a wonderful Christmas gift. We've already had a great rally this year, but it's only about 2%. And I think what's going to be interesting is when this tax package starts to go through, how are people going? They're going to have to sell stocks for certain tax reasons, and I think that's going to be the one thing that we have. Also, are people locking in profits right now? And you're going to see a downturn. I don't think you will. I think the projection, because this last jobs number was the first one that was out without a disruption from the hurricane, and what we saw from that was that the fundamentals of this economy are incredibly strong, which I think this market will be trading on.
Okay, John, you're still on deck with this one. This is from Bank of America. They're looking to the future, and they're saying the NASDAQ. Let's talk about the NASDAQ. They say it could hit 8,000 by next summer. That would be a 16% gain from where it is now. First to you, John. Are we going to get that kind of gain for the NASDAQ?
I hope we do. It's about a 20% growth from right now at about 6,900. So I think it's very possible. One of the telling things, and Rupert Murdoch's a great interview this morning with Maria Bartiromo on Fox Business, was he talked about the threat of Facebook when he talks about competing technologies and competing television programs. I think when you start to see that growth, which is not necessarily factored in with these tech companies, you could see that NASDAQ surge ahead. All
right, John, Steve Forbes, a 16% rally in the NASDAQ by the summer of next year. What do you think?
Oh, I hope so.
Yeah, but are we going to do it? We all hope so, but are we going to make it?
The answer is yes, with the usual caveats. We don't get a trade war. We don't have North Korea and that kind of thing. But the key thing, too, Stuart, in terms of getting the 25,000 Dow this year, is when we see the particulars in terms of the provisions they put in this bill to make sure people don't game the system with earnings overseas, all these little niggling things, if they clean that up and it looks like they're cleaning it up, then you're going to get that 25,000. So it's those little details we got to see now.
Okay, got it. We would be remiss if we didn't talk about Bitcoin. I think the price has stabilized a little bit. We're at 16,000 now. Fed Chair Janet Yellen, she's not really buying into all the hype about Bitcoin. She warned yesterday that it's a highly speculative asset. Let's go to Steve first. Your thoughts on Bitcoin?
Well, for once, Janet Yellen said something that's truthful and useful. It is speculative. The thing about cryptocurrency, Stuart, the key thing is if you want to use it for money, it's got to have a stable value. And there are some out there that are working on that. Bitcoin is useless in terms of using it for money because one week you have steak, the next week dog food. That's not money.
Actually, that's what Janet Yellen said yesterday. It's not a medium of exchange. It's just not.
Yeah, just because it says coin doesn't mean it's a currency, right?
That's right. John, last word to you on Bitcoin.
Well, I think Mr. Forbes is right. I think he's also right about the tax code. I wish the Republicans would listen to him more. He's right about Bitcoin. I think it's the biggest bubble since Tulip Mania. But I think there is a fundamental asset underneath it that is worth something. Cryptocurrencies, I think, are going to be the future. I'm just not sure Bitcoin is, but I think I'm very positive that this is a bubble.
Quick call.
Guess who's talking about doing a cryptocurrency?
Who?
The Federal Reserve. An economist at the St. Louis Fed said maybe the Fed could step in and have a currency for the unbanked.
My head is spinning. You managed to get Fed
Digital
Bitcoin
currency
in the same sentence and no buzzer. That's pretty good. That's well done. Big business story, and it's coming out today. Disney is buying some of the assets of 21st Century Fox, and they're going to pay $52.4 billion. Give me the details.
Two of the biggest players in Hollywood now together. Disney is going to get Fox's TV and film studios, the FX network, National Geographic, the regional sports network, which it will combine, by the way, with ESPN, which is very strong. That will be a regional sports powerhouse. Could that get some federal regulatory issues? Don't know. But they also get 30% interest in Hulu, which will make them a majority owner, Disney that is, of Hulu. That could change the life for Hulu a little bit. Also, Sky in the UK. Disney will either get part of it or all of it, depending whether Fox can move through with getting all of Sky. Also gets TV satellite business out of Asia, Star India. All of this put together is all about getting all the content and the distribution to get that content out. Disney is hurting with the cord cutting that's been going on. They're going to launch this big streaming service platform. At the end of next year, they're going to start with the ESPN service. Then at the end of next year, they're going to have all of this content to put on there. They're bringing back all of their content from other platforms and doing it themselves.
John, is Disney really going to be a big player in streaming the way they would like to be?
I'm not sure they're going to be a big player in streaming as far as their own individual streaming. You already have Netflix, and Hulu does a wonderful job out there that will include a lot of these assets. I think what you're seeing, though, the deal itself is a great vertical integration. Content companies are buying distributors. Distributors are buying content companies. You have to be vertically integrated and have scale now to compete in the world.
What do you say, Steve Forbes?
I think this is Rupert Murdoch's liberation. In effect, he's telling the Europeans, I'm not holding back now. No matter what the UK does, I'm going ahead with the stuff I like. So this is good news for Fox Business, good news for Fox News.
It's about defeating Netflix and Amazon. And could Disney buy Netflix down the road, right?
Yeah, I guess. I mean, who's Microsoft going to buy? They don't have any content.
And then you have the Apples of the world that have all this cash. They can really crank out that content, you know. I mean, Netflix is going to spend $8 billion next year on content. It's insane. The whole landscape's changing.
Oh, rapidement.
Rapidement.
That's what I was trying to say. Right. All right, thank you, John. Steve, you stay here.